Okay, so here we go. So maybe you're looking for a portfolio to build to the future, and so we're gonna, this is one that's designed for AI towards the future, and what this essentially is there's different ways you can go about it. You can do a 20% allocation into these. So you're going to have, ARC, you're going to have Cloud, QQQ, Global X Robotics, and DAP. And maybe, these are non-leveraged. But maybe you want some leverage in there. So you can go with SOXL, TQQ, TECL, and UBOTs. Right? And, well, maybe you want to have all of them in there. So you just go 10% in each one. So you have, some leverage and some that's not, right? And what's interesting about this one is if you have one that's not leveraged, you could throw in some gold and use gold as for buying dips into TQQ or TECL or SOXL or UBOTs. So you can use gold as your cash reserve, and you can buy these dips. And it doesn't matter how you start essentially, but we're just going to start with 200 and invest that every single month. You're going to rebalance annually once a year. And of course, this isn't a portfolio that's, it's got, VanEck Digital, DAPP, started in 2021. So, this is like a three-year investment so far. And you can compare them and look at them. And you can see that, look at this now. Isn't this interesting? The 10% with the gold holding. And this doesn't factor in using gold as a cash positive, right? Or for buying dips. So this essentially could be a lot better, right? This one, look at it. You have a lot of volatility. Not much gain. But this type of stuff is going to compound. This is for the heavy compounder. Long term, it's going to severely overperform. We can look at what's going on here. So you can see here, where portfolio 2, is that green line, and it's just taken off from everybody else. This can, over time, this is going to explode. If you come back to the beginning, your first couple of, your first year, you're kind of underperforming the S&P 500. And that's the kind of stuff that's just going to happen. These things are long term, even though people try to trade them. You don't want to trade anything. And as you can see, if you just held it long term, it just shoots up. It's just going to keep accumulating. Of course, now it's coming back down, but it'll, over time, it's going to hyper accelerate past all the other portfolios. But the price you pay is you're going to have this volatility in there. But, this one right here, even though it's the outperformer at the moment, it'll probably come in second. This would probably be first, second, third. But it all comes down to